Good afternoon, everybody, and welcome to the Traders Mindchat show. Today's topic, we are going into Jesse Livermore's story. And the reason why we are doing this, I actually polled our audience to see, well, what are you guys most interested in? Are you most interested in psychology? Are you most interested in setups and analysis and that kind of stuff? Are you interested in tips and tactics? And the majority of you are interested in psychology. So I thought, what better place to start than with the story of Jesse Livermore? And we're going to start out with a bit that I wrote here on Jesse Livermore in the Trading Mind Wheel book. And let's begin. So, Jesse's unique story of the unique style of trading enabled him to not only compound and build a massive fortune, but to become one of the richest people in the world at the time. He started at only 14 years of age back in 1891, and he bet $5 on Chicago, Burlington, and Quincy World at a bucket shop, which is a place that took leveraged bets on stock prices but didn't buy or sell the actual stock. Kind of like it's almost like options in today's terms. And this bet made him about 60%, turning $5 into $8.12. So for context, $5 back then would be equivalent to about $100 today. And so that would turn $100 into about 160 in today's money. Not bad for a quick return, right? So he continued to do this for a few years. And by the age of 16, he was regularly bringing home about $200 per week. A few more years went by, and at age 23, he was able to move to New York. Soon after, he made an incredible trade at Harris, Hutton and Company stockbrokers, turning 10 grand into 50 grand in just 5 days. Could you imagine that? Making 5 times your account in just 5 days? Absolutely incredible. And then, of course, came his first blow up. He anticipated a correction, went short using 400% margin, and lost it all. Not to be deterred. I see a few questions coming in already. Yes, hi Caleb. Yeah, well, we'll get to the end of what eventually happened to Jesse, but not to be deterred. Jesse borrowed some money, moved to St. Louis, where nobody knew him, and started betting in bucket shops again. Later in that same year, he bought stock in Northern Pacific Railway and parlayed 10 grand into $500,000. So already what we see, concentrated bets, we see bets in just a couple of different things here, right? And most of the time, most of the big wins are coming on the back of one big trade, right? Concentrated, one trade, leveraging, all that. But then this type of back and forth of extremely massive wins and eventual blowups continued for Jesse. He had to declare bankruptcy multiple times throughout his life. He had a trading system and a set of rules that enabled him to not only win, but to become one of the wealthiest people in the world at the time. Unfortunately, as author Stephen Covey once wrote, nothing fails like success. And after Jesse's massive wins and getting back on top, he'd eventually rest on his laurels, get sloppy, and stop following the rules that enabled him to climb to the top and amass this crazy fortune. Wild swings from extreme wealth, over 100 million in 1929, which in today's money would be close to $2 billion. Right? So here's a kid that started out with $5, right? If you've got $100 in your trading account, eventually growing it with nothing else to becoming a billionaire. Proof is right here. It can be done. Grew his account to 100 million to needing to declare bankruptcy multiple times. Eventually drove Jesse mad. He fell into a deep depression, and in 1940 he committed suicide. So many, many lessons in this particular story. I'd love to hear what some of your takeaways are from it. Here are some of the ones that I've highlighted. So number one, the importance of risk management. Jesse's repeated boom and bust cycles highlight the importance of managing risk and avoiding over leveraging. Yes, it's important in order to have the big wins, in order to have a 60% return in a few days, in order to turn 10 grand into 50 grand in a week, you're going to have to be concentrated. You're going to have to be leveraged. Is that necessarily for everybody? It's a question that we've got to answer for ourselves. It was for Jesse. In order for him to do that and to do that effectively, he needed precise timing, he needed concentration, and there was also risk management components to it at that time. If we over leverage and we don't manage risk, then it leads to the proverbial boom and bust cycle. And one of the things that I've seen happen to others, and I've experienced this myself too, is when things start to get good, it becomes a little bit easier to start to assume that things will stay good. And sometimes, if we're not careful, that means that we start to relax on the things that got us to where we are in the first place. If we do that, we're opening up ourselves to catastrophic blowups like Jesse had. Next up, number two, discipline. Discipline being key. Jesse succeeded when he followed his trading rules, but when he failed, he would deviate from them. Consistency in applying a proven system is crucial for long-term success. If we're inconsistent in our rules, in our method of trading, in anything, well, we're going to have inconsistent results. It would be like if you have a destination that you wanted to get to. Let's say that you're starting out in New York. Right? I'm in New York. Let's say that I want to drive across the country. If I wanted to drive straight across the country, I can take out a map, draw a line, get there, right? Or have GPS guide me along the way. But if I decide that, oh, you know what? I want to go up to Canada and then maybe shoot back down to Mexico, and oh, maybe I want to go back over to Pittsburgh for a little while. That's like this weird meandering path, and I never actually get to where I set out to go in the first place. And that's what a lot of people do with their trading unwittingly, because if you know where you're going, right? If you start out with the goal in mind, then you could start to figure out the path to get to the goal. And then the only thing that's going to knock you off track is if you begin to deviate from that plan. Now, a lot of people will say, well, I don't know how to get to the goal. Right? I'm new. I've tried a couple of different things, and it doesn't work out. So I don't. I might be able to write out a plan, but I don't really trust that plan. And in some respects, that's appropriate thinking, because you wrote out this plan. You're new. You don't really know if it's going to work or not. You have some evidence that you've written out a couple of plans before and they haven't worked. So now you're in the spot where, I'm just going to do what I feel like. Or I'm going to I don't know, follow somebody else, maybe sign up for a service or two and say, oh, well, what are these guys doing? I'll follow that for a little while. But also, we in that person developed the habit of just kind of doing what feels good. So even though they might be following somebody that is disciplined, if they are not consistently following that person, then they're also deviating from the path. So what do you do in that scenario? That honestly, that's a big part of why I wrote this. The reason why is because there's certain skills that we need to develop, and we need to have an awareness of those skills. One of those skills is mindset and beliefs. A lot of stuff lives in our subconscious. A lot of the habits are at a subconscious level. I was talking to my friend Sakib yesterday. Different conversation. We weren't talking about trading. We were actually talking about religion and beliefs. One of the things that came up was psychology. And there's a part of psychology that speaks about learning, and there's 4 stages to learning, right? There's unconscious incompetence, right? Where you don't know what you don't know, and therefore you're kind of lost, and you don't even realize that you're lost. Then there's conscious incompetence, where you at least know enough that you're lost, and you don't really know how to get out of being lost, right? You're aware that you're lost. Conscious incompetence. Then there's the third thing, where you start to become consciously competent, meaning that, okay, you're coming up with a plan, you're following your checklists, and you're starting to follow the process, but you're doing it at a conscious level, meaning that you've got to concentrate on this thing. It's not automatic yet. It's not where you could close your eyes practically and get to your destination. Like if there's a well, let's say if you're going to work or you're going to a friend's house and you're driving there, you could be having a conversation with somebody. You could be listening to the radio, and you're not really thinking of, oh, I've got to turn here, I've got to do this, I've got to do that. You just kind of get there, and you get there without hitting a tree or hopefully anything else. And it's miraculous because you're operating at a subconscious level. And that's the 4th stage, where you're unconsciously competent, meaning that you've built the habit. And that's where we want to get to with our trading. The way that you're able to get to it with your trading is by first developing the skills. That's where understanding discipline comes into place, because I would argue that we all have discipline, that it's not a matter of being disciplined or not being disciplined. I would argue that it's actually being disciplined in the right things. Many of us are unconsciously disciplined in the wrong things. So we build habits, right? That's the unconscious part. The habit is where we're operating at a subconscious level, and we're doing the same kinds of things over and over. Well, if my habit is I roll out of bed, I'm scrolling through Twitter, and I'm trying to find what the latest guru had to say on a stock. Well, I'm disciplined in doing that, but is that discipline getting me to where I want to go? Discipline is key. When Jesse had discipline, he was able to become a billionaire in his day. When he lacked discipline, well, ended up losing it all. Number 3, emotional control is vital. Emotional control is vital. So here is what I mean by emotional control being vital. Trading success requires emotional discipline. Jesse's inability to manage the psychological highs of big wins and despair of losses is what contributed to his ultimate downfall. Now, there could be a lot of things that are going on in our lives. And I don't mean to downplay any of that in the least, right? Those things are what's truly important, the things that are going on in our lives. Trading, money, right? Money is it's a means to an end. It can be a great amplifier, but it's certainly not everything. It's uh, if the more that we're able to separate our emotions from our trading, the better off that we're going to be. Now, here's a practical way that I've learned how to do that for myself. So when I started out in trading, let me let me rephrase. Well, when I finally started to take trading seriously, right? Well, with about 2010 ish, 2010, 2011, when I finally found O'Neill, when I found the Investors Business Daily meetup in New York City, and I started to study this thing while like I was studying for grad school. That's when I came up with a budgeting process that said, all right, you know what? I'm going to set aside portions of my money just for trading. Right. So now working full time, going to grad school, getting money from my paycheck. I'm gonna take this amount of money, whether it was I forget the exact amount that it was. It might have been maybe about $100 or $200 per paycheck. Taking that, setting that aside, say, okay, I'm going to trade with this, right? And just set it aside. And 100, $200 like that, that's not a lot, but every single paycheck you're doing that while you're studying, that allows that initial stake to begin to grow in the savings. And you're not emotionally attached to that money because that money is set aside for this specific purpose. It's not where you're just throwing all of your money into one savings account or one checking account. And then it's like, all right, I'm going to trade with this. And then you put on the trades and it's like, uh-oh, I just lost this. Oh man, I could have went out with that money. I could have paid my rent with that money. I could have put a down payment on a car. I could have put a down payment on a house with that money, right? No, that money was specifically earmarked for this purpose. And as you're studying, you could build up that initial stake. It's a great way to divorce your emotions from this specific capital. Budgeting, very important. Let me switch back over to here and see if there's any questions that have come in. Caleb says conscious incompetence would come first. No, so going back to the conscious incompetence versus so the first thing is no, the first thing is actually being unconsciously incompetent, meaning that you don't know that you don't know. That's actually one of the worst states to be in, right? Because the people that think that they know a lot but actually don't know anything are the most dangerous type. They are unconsciously incompetent, but they don't realize it. The people that begin to realize, oh no, I actually don't know what I'm doing, they're at a better position than the people that start out and they're like, oh well, I just put on some trades, I had some success, I know what I'm doing. Those people, if they're not competent, if they're not skilled, if they don't know anything about risk management, trade management, portfolio management, uh, any of that stuff, any of the stuff that I talk about in here, those are the most dangerous types because they don't know that they don't know, and they're more liable to blow themselves up. Um, Conscious incompetence before conscious competence. No, first first you become aware that you don't know, and then you learn how. So that's where being consciously competent would be that okay, you let's say that you've gone through the book and you're starting to learn about oh well here's how I can do analysis on a trade. Here's how I can manage risk. And you're sitting there and you've got your checklist and you're starting to learn and you're starting to apply and you're going slowly. That would be becoming consciously competent. You know what to do, but it's not at a level where it's automatic yet. And it would almost be like pretend you're a chef or you're a baker and you just found a recipe, right? Or you're trying to find a recipe. There's a difference between the person that's like, you know how to bake, you know how to go into the kitchen and get the ingredients, make the cake, but you're following the recipe. You're consciously competent because you know how to, okay, I'm going to crack the eggs. I'm going to put it in this way. I know the temperature to set the oven at because you're following along the recipe. The professional chef, the professional baker, they don't need any of that stuff. They already know exactly what they're doing. They could talk to you, have a conversation, move their hands, pop it in, because they're competent at a subconscious level. Hopefully that makes sense. All right, looks like it does. All righty, so next up here, we spoke about emotional control. Now let's talk about sustained success and how it requires us to adapt. So the saying, nothing fails like success, that emphasizes that overconfidence and complacency can begin to erode progress. So continual learning, continual humility are absolutely necessary to maintain success. You know, it's funny. Earlier today, I was speaking with some of the people that are uh, in our trading accelerator program. One of the lessons that we spoke about was about this complacency, were about managing risk, and a conversation with my buddy AJ came up. One of the things that he mentions in this video, I just shared the video in the chat, so if you want to check that out later on, bookmark that. One of the things that he talks about is continuous learning. It's so important for us to continually learn, to not get complacent with our learning. And the reason why it's worth listening to AJ is because he was a floor broker for maybe about 15 years or so. He traded the copper exchanges, and his only source of income was what he traded. So great, full-time trader, only source of income, his profits. So imagine the type of budgeting, the type of discipline that you have to have for that. Great interview, great person to listen to. Never be complacent with your learning. Leverage, number 5. Leverage is a double-edged sword. Yeah, it certainly is. So while leverage can amplify gains, it can also magnify your losses. So Jesse's use of excessive margin led to catastrophic losses, underscoring the dangers of overexposure. So when we're leveraging, and that this is actually a big lesson that I learned from Jesse too, that I've incorporated into my trading. Yes, leverage is great, but if we are going to leverage, we also need to calculate what our worst case scenario might be. So when we're doing that, here's a good example, right? So let me actually share my screen with you. Right, so here's a trade that I put on. Right, I've been in TSLL now for a little bit, a few days here, and one of the things that I needed to figure out when I got into this trade, actually added to it here. Yeah, Tesla. So in this trade, well, what I would need to do would say, okay, if I'm going to enter here and get more aggressive, what's my worst case scenario? Where do I think that price could go, right? I like to trade charts, and I'm using the historical price action to tell me, well, where have buyers stepped in the past? So if I'm looking at this, I'm able to see pretty clearly that, oh, you know what? Buyer stepped in big time. Let me draw a straight line down here, right? And let's make this nice and big. Put it in yellow. Buyer stepped in big time right down there. So if I'm going with size, right, and in one of my accounts, I've got about half my account in this. If I'm going in with size, then I need to be able to position size and manage the trade. What if price does have an epic failure? Well, if prices fall dramatically, they're more likely to start to find a bid down here, right? Because that's where prices have been supported in the past. I'm buying the breakout here. But if prices were to roll over, I wouldn't necessarily wait for it to fall all the way back here. I might exit here. And there's reasons for that without getting too deep into the weeds. But the idea is that, well, while looking at this trade, I might be initially looking to risk 10%, but I've got to size in such a way where if on the outside chance that prices fall dramatically more than I anticipated and I end up losing closer to 20%, that I don't end up losing my shirt. That's what I mean by learning about position sizing and not over leveraging. I hope that makes sense. Well, we could dig into it more later on in the Q&A if you have specific questions. I talk about that a lot in the Trading Mind Wheel book as well. So let's continue here. All right, so we spoke about leverage. I've got 3 more, right? There's 8 big things altogether. So get your questions ready if you have your questions. So number 6, wealth alone doesn't ensure happiness. That's another big lesson to take away from Jesse's story here. Despite achieving enormous financial success, Jesse struggled with personal fulfillment, depression, mental health challenges. This really does demonstrate the importance of balance in life, the need to prioritize well-being over nickels and dimes or dollars and Benjamins, right? Another part of the conversation that I was having earlier with some of our accelerator members was that, yeah, like I'm not prioritizing getting Lambos and mansions and stuff like that. I'm living pretty humbly too. A lot of the money that I'm making from trading, from business, from other things, a lot of it goes to just supporting time. I'm able to spend time out with my family, spend time out with my daughter, spend time with the new dog, not have to worry about those kinds of things. I'm able to take a good amount of money, and this is what I love to do. And I love to give. So donating money, donating time to church, to just random acts of kindness, stuff like that. Like those are the kinds of things that light me up. So it's not about, and it's not to say that material wealth and material things are bad. They can be very good, but if they become too much of a focus, if we put them on a pedestal, then they become idols. And if we start to make idols out of things, that leads us to very dark places because there's no fulfillment in this idol. Well, whatever that other thing might be. So if we put things on pedestals, uh, it leads us to dark places. So that was a big takeaway for me from Jesse's story. Here's another one. Learning from failures is essential. So Jesse repeatedly rebuilt his fortune after significant losses. So that part's actually good. That you could come back from significant losses. I experienced that myself. I actually spoke about that in the trading mind wheel, and it was one of it was actually one of the things that helped me to have a little bit more confidence. So at one point, I was using one of my accounts as a testing ground, and I would try out different option strategies. I would try out different things with this account. And because it was a testing ground, I just allowed it to go into a drawdown. And at one point, it was down. I forget the exact percentage, but it was something like down 95%. Like I barely had anything left in this account, and then I was just like, "Whoa, all right." So all the stuff that I've been testing in this account obviously not working. So let me try to get a little bit more serious with this account, and that's part of what helped me develop some of the option trading strategies that I'm using today. Uh, this is something else. So Caleb, you heard about this part earlier. Well, with how I trade options and how I'm swing trading options aggressively. So that actually started in this testing account where I would go and I would find a uh, a trade that was working across multiple time frames, right? So looking at a stock that was working across multiple time frames, that was highly liquid, had a highly liquid options market, and I would go and I would buy the calls and trade them as if I were trading the stock. And because I was lining up so much at one specific point, I was able to get a lot of extra leverage on the trades that I was putting on to be able to grow a very small account fairly rapidly. And, now thinking about it, it's almost equivalent to what Jesse was doing with the bucket shop strategy, right? Like he starting out with $5, roughly $100 in today's money, and then being able to parlay that. Yeah, that's kind of what I was doing with that small account once I was able to finally turn it around. So understanding that you could come back from major drawdowns, that I found that to be very helpful. But also the other parts of the story to not rest on laurels, because if we begin to rest on our laurels, then guess what? We're going to go right back to where we were. Finally, last big lesson from that I had from Jesse, and I can't wait to dig into the ones that you have and some of your other comments and questions. Is this: longevity in trading requires more than talent. Talent enough. Uh, Talent alone is not enough. Sustained success is going to require systems. It's going to require risk management. It's going to require emotional control, the humility to stay disciplined, right? One of the biggest things that leads to people failing and falling off track is hubris. Hubris. Starting to think that you're bigger than the rules. Starting to think that, I've made it. I don't need anything else. I'm good. No. Humility. Humility to stay disciplined even after the major victories. That is that's paramount. So let's see. Well, what other comments or questions do you guys have? If you don't have anything else, then it's going to be lunchtime for me. But I'll give you a moment to type in your questions. Yes, Caleb. Caleb mentions that he's been a victim of hubris before. So have I. And quite honestly, it's one of the big reasons why I make it a habit to pray every day and to pray multiple times a day. Well, one of the things that prayer has done for me on a practical level, I don't know if you guys that are here watching this, watching the recording later on, if you're religious, if you're not religious, that part doesn't matter quite as much. Well, what prayer does for me, and some people will use meditation kind of in the same way, but what prayer does for me is that it has me focusing on what's more important. It has me focusing on humility. And in that, it's keeping me in alignment with what I need to do. And what I need to do is the process, right? The system, following it. Whether I'm going to win on this trade or win on that trade, that doesn't matter. If I'm following the process, then at the end of 100 trades, 200 trades, I know that I'll not only be up, but I know roughly how much I'll be up. Why? Because I'm following the process and I know my stats, and that's part of the process as well. All that stuff, it's all baked in here. Alberto says, "Don't you think Livermore's ultimate downfall was due to his weak psychology? That's certainly part of it. That's certainly part of it. At least, uh, well, it's hard to say weak psychology being part of it because he might have strong psychology at certain parts, right? Well, when he was doing well and leveraging, uh, at times his psychology might have been quite strong. I think that it's resting on laurels, right? Hubris. When things are going well, beginning to relax, becoming the proverbial boom and buster. Um, Another person that I've learned quite a bit from, and I recommend you checking out this video too. He's done two of these kinds of videos. Charles Harris. If you don't know who Charles Harris is, I recommend that you type his name into the search when we're done here. Charles Harris is a portfolio manager at William O'Neill and Company, and he's with IBD now. He was also one of the people that taught the advanced courses from Investors Business Daily that I attended, the chart school, market school, the advanced level 4 courses. He did a talk that he was a boom and buster too, kind of like Jesse, where he would have go on these spectacular runs, make tons and tons and tons of money, and then end up blowing himself up. Why? One of the big lessons that he had too, hubris. When you start to think that you're above the rules, when you start to think that, just this one time, or, I'll get in, like I have so much conviction in this one idea. Let me try to get back in because it's kind of close. Let me put on a little bit more leverage because I know better. And it's breaking your rules, breaking your process. If you have your rules and your process over here and you're looking at things objectively, then you would be like, dude, well, what are you doing? But it's that kind of thing. So weak psychology, weak psychology might be a little bit strong. It sounds more like a case of hubris, and then eventually coming to a realization that, yeah, like you becoming your own worst enemy and continuing to fall into that trap and not really knowing how or finding the way out of that. It's a sad story, and it's a story that tells us what can happen if we don't remain humble, if we don't get help. Yeah. Yeah, gratitude is very important, Alberto. I absolutely agree with that. All right. Any other thoughts, comments, questions on anything that we've discussed here? Alrighty. For those of you that have not already subscribed to the channel, make sure that you subscribe to the channel. If you haven't gotten a copy of the Trading Mind Wheel yet, I highly recommend it. It's available on Amazon. And that is it for today. So thank you all so much for tuning in. It's been a pleasure. If you're watching this later on and you have questions, drop them into the comments. I read all of the comments. Until next time, take care, much love, and God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.